Imagine a world where fortunes are made and lost in the blink of an eye. A world where a single tweet can send markets soaring or crashing. This is the cryptocurrency market, a digital frontier that has captured the imagination of millions. But what drives this volatile market? Why does it rise and fall so unpredictably? And what does the future hold for this revolutionary technology? Join us as we dive deep into the current state of the crypto market, explore recent developments, and uncover the forces behind its wild fluctuations. The current state of the cryptocurrency market. The cryptocurrency market in 2023 has been a rollercoaster ride, marked by dramatic twists and turns. After the turbulence of 2022, which saw major crashes and the collapse of giants like FTX, the market has shown signs of recovery, but not without its challenges. Bitcoin, the flagship cryptocurrency, has experienced significant volatility, swinging between $20,000 and $35,000. Ethereum, following its successful transition to proof of stake, has also seen renewed interest. Meanwhile, altcoins continue to ride the waves of speculation and innovation. The market's recovery has been fueled by several factors. Institutional interest is growing, with major financial players like BlackRock and Fidelity entering the space. Additionally, macroeconomic conditions, such as inflation and interest rate hikes, have driven investors to seek alternative assets like Bitcoin, often referred to as digital gold. However, the market remains highly sensitive to external factors, including regulatory announcements and geopolitical events. Despite the recovery, challenges persist. The collapse of major crypto lenders and exchanges in 2022 has left a lingering sense of caution among investors. Security concerns, such as hacks and scams, continue to plague the industry. Moreover, the environmental impact of cryptocurrency mining remains a contentious issue, prompting calls for more sustainable practices. In summary, the current state of the cryptocurrency market is one of cautious optimism. While there are signs of growth and maturation, the market remains volatile and unpredictable, shaped by a complex interplay of factors. Recent developments in the crypto space. The cryptocurrency market is not just about price movements, it's also a hotbed of innovation and regulation. In recent months, we've seen groundbreaking developments that are shaping the future of the industry. One of the most significant trends is the growing interest in central bank digital currencies, CBDCs. Countries around the world, including China, the European Union, and the United States, are exploring the potential of CBDCs to modernize their financial systems. These digital currencies, issued and regulated by central banks, aim to combine the benefits of cryptocurrencies with the stability of traditional fiat currencies. Another major development is the increasing institutional adoption of cryptocurrencies. BlackRock, the world's largest asset manager, has filed for a Bitcoin ETF, signaling a shift toward mainstream acceptance. Similarly, traditional financial institutions are integrating crypto services, such as custody and trading, into their offerings. This institutional involvement is bringing greater liquidity and legitimacy to the market. On the regulatory front, governments are taking a more active role in shaping the crypto landscape. In the United States, the Securities and Exchange Commission, SEC, has intensified its crackdown on unregistered securities, targeting major players like Coinbase and Binance. Meanwhile, the European Union has implemented its markets in crypto assets MiCA framework, which aims to create a unified regulatory environment for cryptocurrencies across the bloc. Technological advancements are also driving the evolution of the crypto space. Layer 2 solutions, such as Optimism and Arbitrum, are making blockchain networks faster and more scalable. Zero-knowledge proofs, a cutting-edge cryptographic technique, are enhancing privacy and security. Additionally, the rise of decentralized finance, DeFi, and non-fungible tokens, NFTs, is expanding the use cases of blockchain technology beyond traditional finance. These developments are not without challenges. Regulatory uncertainty remains a major hurdle, as different jurisdictions adopt varying approaches to crypto regulation. Security concerns, such as smart contract vulnerabilities and exchange hacks, continue to pose risks. Moreover, the environmental impact of cryptocurrency mining has sparked debates about sustainability and energy consumption. In conclusion, the crypto space is undergoing rapid transformation, driven by innovation, regulation, and institutional adoption. While these developments hold great promise, they also present challenges that need to be addressed for the industry to reach its full potential. Why is the crypto market so volatile? One of the most defining characteristics of the cryptocurrency market is its volatility. Prices can skyrocket or plummet within hours, leaving investors exhilarated or devastated. But why is this the case? Several factors contribute to this unpredictability. First, the market is still relatively young and lacks the liquidity of traditional financial markets. With a total market capitalization of around $1 trillion, the crypto market is dwarfed by the $100 trillion global stock market. This limited liquidity means that large trades can have a disproportionate impact on prices, leading to sharp fluctuations. Second, the crypto market is highly influenced by news, social media, and even celebrity endorsements. A single tweet from a high-profile figure like Elon Musk can send prices soaring or crashing. Similarly, regulatory announcements, such as bans or approvals, can trigger massive market movements. This sensitivity to external factors makes the market highly reactive and unpredictable. Third, macroeconomic conditions play a significant role in shaping crypto prices. Inflation, interest rate hikes, and geopolitical events can drive investors toward or away from cryptocurrencies. For example, during periods of economic uncertainty, Bitcoin is often seen as a hedge against inflation, leading to price increases. Conversely, rising interest rates can make traditional investments more attractive, causing crypto prices to fall. Fourth, the speculative nature of the crypto market attracts both seasoned investors and newcomers. Many investors are drawn to the potential for high returns, often without fully understanding the risks involved. This speculative behavior can amplify market movements, creating bubbles and crashes. Finally, the lack of regulation and oversight in the crypto market contributes to its volatility. Unlike traditional financial markets, which are subject to strict regulations, the crypto market operates in a largely unregulated environment. This lack of oversight can lead to market manipulation, fraud, and other unethical practices, further exacerbating volatility. In summary, the crypto market's volatility is the result of a combination of factors, including limited liquidity, sensitivity to news and social media, macroeconomic conditions, speculative behavior, and lack of regulation. Understanding these factors is key to navigating the unpredictable world of cryptocurrency. The future of cryptocurrency. Despite its volatility, the cryptocurrency market continues to evolve and mature. Institutional adoption is on the rise, and blockchain technology is finding applications beyond finance, from supply chain management to healthcare. However, challenges remain. Regulatory uncertainty, security concerns, and environmental impacts are issues that need to be addressed. One of the most promising trends is the integration of blockchain technology into traditional industries. Companies are exploring the use of blockchain for everything from tracking supply chains to managing digital identities. This integration has the potential to revolutionize industries, making them more transparent, efficient, and secure. However, the future of cryptocurrency is not without challenges. Regulatory uncertainty remains a major hurdle, as different jurisdictions adopt varying approaches to crypto regulation. Security concerns, such as smart contract vulnerabilities and exchange hacks, continue to pose risks. Moreover, the environmental impact of cryptocurrency mining has sparked debates about sustainability and energy consumption. In conclusion, the cryptocurrency market is a fascinating blend of technology, finance, and human psychology. It's a space where innovation meets speculation and where the future of money is being rewritten. Whether you're an investor, a technologist, or simply a curious observer, one thing is clear: crypto is here to stay. But as with any frontier, it comes with risks and rewards. So, as we watch this digital revolution unfold, let's stay informed, stay cautious, and stay curious. The future of finance is being built, one block at a time. The cryptocurrency market is a fascinating blend of technology, finance, and human psychology. It's a space where innovation meets speculation, and where the future of money is being rewritten. Whether you're an investor, a technologist, or simply a curious observer, one thing is clear: crypto is here to stay. But as with any frontier, it comes with risks and rewards. So, as we watch this digital revolution unfold, let's stay informed, stay cautious, and stay curious. The future of finance is being built, one block at a time. Thank you for watching. Don't forget to like, share, and subscribe for more updates.